Dollar CAD daily forecast, March 26, FXEmpire.com. The dollar Canadian pair originally rose during the Friday session to peak over the parity level, but as you can see on this chart, I have the 200-day exponential moving average, and that is pretty much where it stopped. We have formed a shooting star, and this is a very bearish signal. Whether or not we're looking at a meltdown is a completely different story, but a continuation of consolidation would have this pair falling roughly about 100 pips once we break the bottom of the shooting star, and that is exactly what we prefer to do. Of course, if we manage to break above the 101 level above, we would have to rethink the entire situation, but with the oil markets showing a propensity to rise, especially on the longer term charts now, it's very likely that we will get the short signal in this pair. The oil markets are very sensitive to headline risk currently, and as such, more than likely we could see a move down. Now, whether or not we break through at the bottom is a totally different story. But clearing 98 on the longer term charts as well sends this pair much lower. So one of two things can be done. You can either trade for the short-term move, which is essentially what we're doing, but once we get towards the bottom, if you have the ability to move stops up to break even and let it run to see if we break down, that is a possibility as well. Either way, we just don't see this being a likely buy anytime soon.